Did you intentionally transition, and probably because it was more profitable for you, transition away from taking profits based on technicals to now taking profit based on fundamentals?
Yes.
Did that improve your profitability? Or was there another reason of
big
psychology?
time, big time.
Oh, yeah.
Because if you are, because as I said, fundamentals drive price, and you can really catch the market turns, the fundamental market terms, the big market turns, the weekly market turns. If you catch these market terms, price can go almost forever because you catch the new trend at the bottom or at the top, basically. And then if I got out on these trades on the next opposing zone, I would miss out on a lot of profit potential.
And when it comes to your position size, let's say you've risked $10,000 on a trade, and is there any way you're going to take, let's say, $5,000 of risk off?
No, it's always all or nothing.
Oh, wow.
That's how I learned.
Why?
I learned
Well, because of I used to do something similar, and I realized that if it doesn't reach my final target, but I was up a decent amount and it came back to break even, it's all or nothing, yes. So I didn't lose anything, but I kind of valued the opportunity cost of I was up 15,000 and that 15,000 came back to break even. That was kind of money lost as I viewed it.
I fully understand you, and I fully get you. But based on because in the very beginning, I was also, I was journaling and logging all the trades. And I always had, for me, what is really important when it comes to logging, I always had a imaginary target where I was like, I take a conservative target, but also a target where I just put a line in. And I said, okay, this is where I think price could go based on my tools. Okay. And based on my sample size, literally most of the times, price went to I think price will go there target, right? So because then I saw, okay, I can trust that system, so I'll change my approach from conservative target to that's where I think price can go, quote unquote think, right?
So just for a bit of clarity on my end, let's say your final destination or your average winning trade, which goes to your preferred zone, how many R is that based on your risk?
Well, it can be between 1 to 1 and 1 to 4. But imagine there's a daily zone, sometimes even a weekly zone. If I cannot refine it, if it's hard to, if I, for instance, what I would consider daily level on top of level, if you have very like two
alignments,
two daily demand zones that are close by, like one below, and you basically don't know where price is going to stop or turn. Is it the first level or is it the level below? And then I say, I just don't know, right? I would just combine both levels. So basically, I would sacrifice. I would basically then, sacrifice on risk to reward, but increase the probability of getting filled and being in that trade, and also increase the probability of not getting stopped out.
Yes. You give yourself a healthy buffer.
Exactly.
Okay. So on that one, let's say your preferred zone is the 1 to 4. It's one of your better scenarios, and price goes to 1 to 3.
Yes.
So your 3 are up, and then it goes back to your break even.
This doesn't happen. No. Then I would know. I mean,
you would see it in your indicator.
Then I would at least, I trail along the way. Like I would not.
Are you trying to stop? Okay,
I would not. Well, I mean, it could happen obviously that I'm up then 30,000, and then price goes back, and I'm only taking 15K, right, or half of it. But this happens. Obviously, this happens. But yes, but I would trade. I would never let. And this would be bad. This would be bad money management, right? Because I would be a bad risk manager if I'm $30,000 in profit and then I let it go back to break even, or even some traders would let it go back in because they don't want to be wrong and they think I'm now right. This is like the mental trap. They would even lose then. No, this is not happening. Then I would be a bad risk manager.
Right? The reason I ask is because my biggest growth in my 7 years of trading is the last 2 or 3. And the last 2 or 3, I didn't have to modify too much my strategy. I just have to optimize in certain ways. And when I started to optimize, I didn't have to change my edge. I didn't have to change my technicals. I didn't have to change really anything. It was just I had to improve my money management. And that's why I ask, because I felt in my system, one of my biggest inefficiencies was not my win rates, not the losses I was taking. It was the profits I didn't actualize. So that's why I was kind of focusing on that. So your approach is
for me was the opposite. For me was the opposite. Basically, I took profits too early because I didn't let it run through. And still, the previous trade I had was on Walmart. It was like a CFD stock, right? Yes. I took it on all prop firm accounts. When I look at how far it went, actually, now after I took profits, I was like, beep, right? I could have I could have held that trade much longer, right? But I went out because fundamentals told me to go out. I was overvalued, which was the best way. But then I saw price rallying further, and I was like,
Is what
but
it
it's
is.
but it's what it is. That's also trading, by the way. That kind of, I don't know how you feel about it, but I'm like, in general, I'm a perfectionist, and I'm kind of never really happy. You know, you either take profits too early or you take profits too, like you're kind of never really happy with what you achieve. Somehow in the moment you're like, okay, I took profits, great, but afterwards, if you cross-check the chart and if you look where price went or what you could have done better, you're like, maybe here, maybe there. You know,
so
like
I have a few like mantras or sayings that I repeat to myself all the time that give me this level of comfort that I have reassurance. And I'd be interested if you have any of your own. But one of my strong ones for that exact issue is, I always say to myself, a restricted trader is a profitable trader. Meaning, we've been vlogging this week with the boys, and and as you know, I've been giving signals on Twitter for this is the 11th
and
week.
it's great, yes.
So I've been there was position today and position yesterday. Both of them were like tick, 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 tick. Good setup, 1x. But that 1x is an important cross. Like it's an invalidation criteria. And in the end, both trades played to my full target.
But you didn't take it
And
because
I didn't take
of that
it.
1x.
And I even gave ahead of time, I'm waiting for this, but I'm not going to take it because of this. And it still played. Now,
That's great. No.
when people saw that on Twitter, they were like, I took it anyway, la, la, la.
Yeah.
And as I said, look, a restricted trader is a profitable trader.
Yeah.
I didn't take it, not because I didn't feel like it. It was, I had something that invalidated it. And today it was correct, but tomorrow it could be wrong. Day after it could be wrong. It was there to protect us. So I've always just been comfortable knowing that my protection mechanisms, even if you took partial, but it kept going, it's fine. A restricted trader is a profitable trader.
No.
Do you have any in your head of like important cornerstones or, you know, ways to ground yourself, sayings, let's say, that you're telling yourself?
No, I think, but I can fully relate to that. And I have a similar approach, obviously. For me, it's like people, or like I had to learn, or everyone has to learn not to be in a position. I think it's more difficult.
Yeah.
I think it's more difficult not to be in a trade versus to be in a trade. You always want to feel that kind of, you know, adrenaline kick.